Reporting a foreign trust for U.S. persons can be complicated depending on the ownership of the trust and whether they're simply a beneficiary and if they receive a distribution. So let's talk about it. If you don't own the foreign trust and you're only a beneficiary, then typically you only have to report any distribution that you receive. There's no de minimis rule. So if you do receive a distribution, you will generally report it on Form 3520. Depending on whether it's grantor or non-grantor can impact whether there's a tax implication or not. If you own the foreign trust, then generally you're going to have to file Form 3520 along with Form 3520A. 3520A is a bit more complicated. Then, in addition, depending on what kind of assets the foreign trust owns, you may have to file things like the FBAR, the Form 8938. You may have to file an 8621 of those investments, passive investments like PFICs or PFICs. If it's a foreign trust, but it owns an entity, like it's common in Australia for a PTY limited to be owned by a trust, then it can get even more complicated because you got to make sure you file the correct form. If not, in the case of Fairbank tax court case, you may be subject to liability if you don't file the proper form. So like if a trust owns a business, you're going to have to file the 5471 and probably the 3520 as well. By filing the wrong form or not filing the right form or any form, you could be subject to fines and penalties.